What's going on, everyone? Welcome back to another video. Today we'll be talking about fair value gaps and the strategy that's really worked for me in 2024. If you're looking for a strategy that's simple to find, it doesn't form out every single day but has a high win rate, make sure to stay to the end because this strategy has been something I've been working on for a long time and it just really works. No extra BS to it, just really simple stuff. So if you guys enjoy this content, make sure to like, follow, and subscribe. And before we get into the video, I have a huge announcement for you. If you want to trade with me live in the Team Bull family, click the first link down in the description below. For this week only, we are allowing a 7-day free trial. You can come into the Team Bull Premium chat for 100% free for this entire week and try it for yourself. But thank you guys for watching, and I hope you guys enjoy this video. All right, so let's get into it. So this strategy is based off 3 different things, and we're going to run through those things really quickly. First is the pre-market highs and lows. Second is to identify an impulse move above or below the pre-market high or low. The third step is to target areas of liquidity. Now, there is other steps in between these that I'll be talking about, such as a fair value gap and candle confirmation, but these are the main core steps. Mark pre-market highs and lows, look for an impulse move up or down, and target highs or lows or previous areas of liquidity. This strategy has been really working for me in 2024, and in 2023, it did numbers for myself. Okay, so looking at price here, as we can see, we have the pre-market high and pre-market low mapped out. This was Thursday's trading session on SPY. This setup is great for the upside and to the downside, which is amazing. Looking at the chart here, we have this pre-market high and pre-market low set. Price opens up, chops around a little bit, and then makes an impulse move past the pre-market low. Now, I want to point out something that's really important here. We see this impulse move to the downside, but we see strong candles closing below this pre-market low. A common mistake people do with this strategy is that price will come down, close a little bit below it, have no continuation, and what happens is they get used as liquidity as price typically reverses and starts to move back to the upside or to the downside. So you want to be identifying a big move out of that pre-market high and pre-market low range to where maybe it's like 2 to 3 candles closes below or above. So we have these candles close here, impulse move down, and what we would look for is a retracement back into this fair value gap that's created here and here, and a retracement towards this pre-market low area. So as we can see, we have a fair value gap created here. Price makes a move back up, retesting into that fair value gap, retesting that pre-market low, and then we continue down, but I want you to notice where we continue down towards. Wednesday's trading session low. We have that trading session low from Wednesday. Price comes down, touches it directly, and consolidates right on that level. So looking at this here, the reason why I like this strategy so much is because we're trading within the trend, the short-term trend, not the long-term. We have really tight risk as our stop loss would be a break and hold above that pre-market low. So if price ends up heading back into this range between the pre-market low and pre-market high, that's where I typically like to cut the position. And obviously, if we're trading to the upside, we're targeting previous highs. And obviously, now that we're trading to the downside, we're trading towards previous lows. One other key point here that I like to point out is that we also retest the EMAs. So I have the 8 EMA, the 21 EMA, and the 50 EMA and VWAP. These don't really play a huge factor within my trading. However, I like to see them get retested. It also rejects off that pre-market low and fair value gap. So 3 reasonings why to enter short here. And I want someone in the comments down below to let me know what's the 4th reasoning of me taking a short here. 3, 2, 1. I know someone commented it. It's candle confirmation. For anyone that knows me, I like to wait for 5-minute candles to close. I'm not like one of these ICT traders that look at a 30-second chart, the 1-minute chart. I like to see a 5-minute candle close. That's just my personal system, and feel free to change it up the way you want to. But here we are. So this 5-minute candle pushes up, retests into everything, closes below that fair value gap, and closes red. That signals our short position, targeting previous lows, stop loss above that pre-market low. And if you want even a tighter stop loss, you can put it above that 5-minute high. But I like to give myself a little room for my trades to work. So you just seen the last example on SPY where it was a big move, right? And I don't want to present this strategy as it's going to give you a $5 move every time because that's not realistic. This strategy sometimes doesn't work. And this strategy sometimes gives you little moves that you have to capitalize on. So here's an example on QQQ. And I wanted to show you this because this is typically what you'll find. Pre-market high, mark out. Pre-market low, mark out. Let's make this chart bigger. Price breaks with an impulse move higher. Creates a very large fair value gap. It's more than just one candle breaking this pre-market high. It's 2 Really nice big candles. Nice retracement back. What do we find here? Waiting for the comment to come in. Waiting, waiting. What do we see here? Not only do we retest this fair value gap and pre-market high, but we also retest the EMA's VWAP and have price action confirmation. These 5-minute candles, even though this is a 5-minute red close, we see a large lower wick and a candle close above the gap. And the same thing for this one, but a green close. Okay, we get candle confirmation, we get an entry. At this point in time, you're going to want to target new high a day, right? That's the ultimate goal with the strategy. I always like to say it, if it's trading to the downside, your goal is to get a new low of day. If you're trading to the upside, you're looking for a new high a day. But here, price, you get your entry. We have an instant move to high a day. It's absolutely crucial to be trimming here and doing the proper risk management and trade management here. So you definitely want to trim here. In fact, I trim 75% at new high or new low of day. The last 25%, I set my stop loss at break even and I let it ride. So if that means we're going to get a $5 move, I'm going to capitalize off that $5 move. If that means price is going to come right back down and stop me out at break even, that means I had a solid green trade and I can't blame myself for it. But guess what? There's nothing worse than missing those $5 to $10 move days and knowing that even just a few contracts or one ES or two ES contracts or whatever you have can make you more, and just by holding it for that week or that month than you've made maybe in a year trading, right? So it's absolutely crucial to be holding your positions at least a little bit, just a little bit. And the best part is if you can position yourself that way, trim accordingly, manage your stop loss, you'll have a winning trade regardless, right? You can go on with your day, go hit the gym, go whatever, walk the dog, and come back and see where the price is at. You either stopped out or you're in well on profits. But yeah, I know there's going to be a lot of questions on this, so make sure to drop them in the comments down below because I can go way more in depth when it comes to fair value gaps, when it comes to price action confirmation, when it comes to creating levels on highs or lows. Whatever you guys want, comment down below. That's really it for the video. I really appreciate your guys' time. This is my first video back in a very long time, so I just want your feedback and your honest thoughts. Make sure to subscribe, follow for more, and thank you guys for joining in.